Greedy banks have been taking advantage of savers for far too long, but is there a viable alternative? Peer-to-peer lending is a fantastic way for ordinary people to really boost the interest they receive on their money.
We've already reviewed a few other peer-to-peer platforms such as Funding Circle and Assets Capital, so it's also fair that we review Zopa, which is also at the forefront of peer-to-peer lending.
In this video, we're going to give you an unbiased review of Zopa and why this peer-to-peer lending platform can potentially put you on the path to financial freedom. We're going to look at who Zopa are, the projected investment returns, and give you our honest opinion. Let's check it out.
Welcome to Money Unshackled, the investment channel that sets you and your finances free. This is Andy, I'm Ben, and if you like what we say, be sure to click the like button and hit subscribe.
If you plan to invest in Zopa, then you probably want to use the link in the description below. If you use this link and invest £2,000 or more, you'll receive a £50 bonus, a great boost to your investment. Without further ado, let's get into it.
What is Zopa? Having launched in the UK in 2005, it became the first peer-to-peer lending company in the United Kingdom. Why does this matter? Well, it's one of the few peer-to-peer platforms to have survived a recession.
Most other peer-to-peer platforms were created after the financial crisis, so unlike Zopa, they cannot boast that they have survived the worst. This is a great selling point for Zopa, as it gives their investors great confidence knowing that their money is relatively safe in their platform.
Not only were they the first platform, but they are also the biggest. As of January 2017, Zopa became the first platform to lend over £2 billion.
Zopa also became fully regulated by the Financial Conduct Authority in 2017 and then started offering an ISA shortly after. Which is obviously great, as we want to keep the greedy taxman away from our hard-earned money.
What rates does Zopa offer? I bet this is the bit that you're most interested in. Zopa offer two investment products as seen here, which we've taken straight from their website.
They offer a less risky product, which has a target returns of 4.5%, which they call core, and they offer a slightly riskier product, which has target returns of 5.2%, which they call plus. You'll be glad to hear these are the target returns after deduction of expected bad debt and their servicing fee.
These are decent returns, but you can get better returns from other peer-to-peer platforms, including Funding Circle and Assets Capital. We have reviewed these platforms elsewhere in other videos, and we'll put links to these in the description below. These videos also boast referral links of up to £50 cashback bonuses. Zopa lends money to individuals, which are often considered to be less risky. Funding Circle, for example, lends to businesses, so you may expect a more bumpy ride along the way.
Can you access your money early? Loans will vary in length from less than 1 year to 5 years, but amazingly, you can access your money early. The caveat being that as long as another investor is available to take on your loans.
Zopa operates a secondary market whereby investors can sell their loans to other investors to access their money. Unfortunately, Zopa do charge a 1% loan sale fee. This is disappointing but not a deal breaker. Hopefully they will follow Funding Circle's lead and remove this unnecessary charge.
Warning! As with all peer-to-peer lending, your money is at risk. These are not banking products and your money is not protected by the Financial Services Compensation Scheme, so in theory, you could lose all your money. If the Zopa platform ceased trading, then your loan should in theory remain intact and the servicing of those loans would hopefully move to another peer-to-peer lending platform, so you shouldn't lose out. While we have every faith that this would happen in such an event, we don't really know for sure until it happens.
The minimum investment. The minimum investment is £1,000, as they need to make sure you are getting adequate diversification. The smallest chunk is £10, so £1,000 invested would mean you would have 100 loan parts, and each chunk would be 1% of the total pot.
However, they've got some positive news that they are working on going towards £3 chunks and even £1 chunks after that. This is great, as it means you can get wider diversification for the same amount of money invested. However, we don't know if this will affect their minimum investment.
Bear in mind that in order to qualify for the juicy bonus referenced in our link below, you will need to invest at least £2,000.
New feature. A nice new feature, which is in beta, is to see your investment returns over time as seen in this chart. Over time, you will notice sharp drops. This occurs when loans default and is to be expected. Remember, losses are part and parcel of lending money. Just hope that the gains outweigh these losses, as they have in this example.
Our opinion. We really like Zopa. You can get a decent-ish return and shelter those returns from the greedy taxman by using an ISA. It's easy to use and you can access your money early.
Our main gripe is with the small fee to access your money early. You can access any money that you've accumulated in the cash pot free of charge, but if you want to sell those loans early, then you're going to incur this small fee. Overall though, we really do like Zopa, which is why I have a small amount of my own money invested in this very platform.
Question of the day. Which is your favourite peer-to-peer platform and why? Tell us in the comments.
Thanks for watching! On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is Money Unshackled. See you next time.